Hey, what's up everybody? In this video, I'm going to give you a couple of tips on choosing a bookkeeper, okay? There are accounting firms that do bookkeeping, and there are specific companies that just do bookkeeping, okay? And then there are individuals who help with bookkeeping as well. So there's a lot of different options here. But I want to help you kind of figure out questions to ask maybe or how to choose a bookkeeper, okay? You want an actual accountant, someone who understands accounting, is trained in accounting. They don't necessarily need an accounting degree from college. It's less common, I guess, that someone would move into accounting that didn't study it at some point, even if it wasn't in college, they took classes on it or whatever. But you want someone who actually is trained in accounting to do your bookkeeping. And you might think those things are synonymous, but I promise you they're not. So let's talk about why that matters, okay? Now, I know some people who have done this, and I'm not trying to knock it. I'm really not. So I'm trying to be respectful here. But there are companies out there who are advertising, you don't need to be a CPA, which you don't. You don't need to be an accountant, which you do. And you don't really have to have gone through all this accounting training to be a bookkeeper, right? So they've got their Facebook ads, work from home, make $10,000 a month, be your own boss. Let us train you how to have a bookkeeping business. And no, you don't need to be an actual accountant, all right? Now, some of those people are probably doing just fine. They probably have learned enough about accounting to be doing well. The problem, though, is they train you in the bookkeeping without understanding what's actually happening, all right? Now, again, I'm not going to knock this. I think it's okay. It's hard to say this. I don't want it to be offensive, but I worked for an organization before that had people in some finance roles that weren't trained in accounting, and they were able to do the job. They were trained to do the job, all right? And they were doing the job well, but they didn't understand some of the things they were doing. So if something came up outside of the norm, they didn't know how to handle it because they were taught to move A to B. But if something was slightly changed, they didn't actually understand the accounting behind moving A to B. So they didn't know how to adapt to a different situation. They were just taught, move this to here. Here's how you do this step, okay? And that matters when you're looking for a bookkeeper. Because if they've been trained in QuickBooks on how to use QuickBooks and a feature changes, or the situation, the transaction is slightly different than what the transaction is that they were trained on, they might not do it right. Or if you're doing it yourself, QuickBooks makes things, and other bookkeeping solutions, FreshBooks, Wave Apps, all of them, Peachtree, they all try to make things as simple as possible. You write a check, you pick a category or an item. They have items, but they all have to be tied to your financial statements, whether it be the balance sheet or the income statement, right? So it's going to be tied to one of those accounts. You get a bookkeeper who's doing what they're supposed to do in QuickBooks, but some kind of setting is wrong, or there's a different transaction and they're not 100% sure how that transaction should be handled, and they put it into QuickBooks. Everything is going to look fine in QuickBooks, but your financials are going to be wrong. Why does that matter? Okay, if your financials are wrong and you've either over-reported your income, then you're paying more taxes than you should. If your financials are wrong and you've under-reported your income, you're not paying enough taxes, you end up getting audited. They hit you because they understand accounting. They hit you with the incorrect piece and say you owe more in taxes because you deducted this when you shouldn't have. Your books aren't right. So all that to say is you need someone who's trained in accounting. I don't care if they're an individual up to a large organization. You need to actually find out if they're trained in accounting or if they just know QuickBooks and how to do bookkeeping, all right? Because it's a big difference. I have even talked to clients. Now, I do understand bookkeeping. I've taken some of their training classes. I use QuickBooks all the time. 90% of my clients use QuickBooks. So I know how to use QuickBooks. But there have been some situations where I've just flat out told a client, I say, look, I don't actually know how QuickBooks wants you to handle this. Like, what if you looked at the QuickBooks instructions or went to a QuickBooks employee who said, here's how we design the program to handle this transaction. I've looked at someone and said, I don't actually know how QuickBooks wants you to handle it, but I did it this way. I looked at the accounting records and the accounting is right. okay? Accounting existed before QuickBooks. Believe it or not, before applications, before computers, accounting existed first. So there's accounting behind that, and you can see it either through the general ledger, the balance sheet, the income statement. So I go to the general ledger, I say, look, I did the transaction this way. I did a manual entry, maybe a journal entry, and I did the transaction. Bank account reconciles. The accounting is right. Now, if you call someone in QuickBooks, they might tell you to enter it a different way, but the accounting is right. And so there you go. That's what matters at the end of the day, is that your financial statements are accurate. So you need someone who understands the actual accounting. The elements here are the balance sheet, the income statement. Both of those things together can be viewed in a general ledger where you have every account from balance sheet down to income statement. You can see every transaction in and out of every account. Okay, they need to be able to understand that. Now, what typically gets done incorrectly? Man, it's actually, I was just thinking about this, and it's actually kind of hard to pinpoint what the actual error is. It's usually a misclassification, okay? And I'm not talking about a misclassification between, okay, this expense should have been office expense, but you coded it as utilities. Because while that's wrong, at the end of the day, your net income is going to be the same. If it should have been this type of expense and you put it in this type of expense, your net income is still the same. So you still pay the right amount of taxes. You still know how much your business made at the end of the year. You still have okay data. Now, it's important for you making business decisions to know your office expenses weren't that. They were actually higher than that. Your utilities weren't that high. They were actually lower than that. So those can be things that really matter to you. So getting those classifications right for business decisions are very important. But that kind of misclassification isn't necessarily an issue for taxes. Now, if those ratios are off, the IRS looks at those ratios based on your industry, your type of business, how much money you make, and they compare it to other people. If there's misclassifications like that, it could trigger an audit. So you could trigger an audit where if your ratios are right because you categorize everything correctly, you wouldn't have triggered an audit. So that's kind of important. No one wants to be audited that I've ever talked to. But bigger issue than that, and it's at least 90%. People who are doing their own bookkeeping or coming from kind of a person who doesn't really understand accounting. Sometimes it's usually they're doing it themselves, but sometimes it's from another company. Stuff is just off. The bank account isn't actually reconciled. So what your books say is in the bank isn't actually what's in the bank. They've miscategorized things. And the biggest miscategorization is something that should have gone to the income statement is on the balance sheet. And that's where I said, if it's money out of your business that's on the balance sheet and should have been on the income statement, you have overstated your income and you're paying too much in taxes. If it's money that came in to your business and it should be on the income statement, but it's accidentally categorized to the balance sheet, you've understated your income and you paid too little in taxes versus what you should have. So then again, you get audited, you get hit with taxes, you also get hit with penalties and interest. So these misclassifications, they happen hands down all the time. 9 out of 10, 99 out of 100, there's always journal entries that need to be made to get the bookkeeping cleaned up. So you need to find someone who actually understands accounting to do your bookkeeping for you. My name's Brad. I'm with Wooten CPA. My goal is to bring peace to your finance and tax responsibilities. One of the ways I do that is through these YouTube videos. Please subscribe to the channel, hit the bell so you're notified when new videos come out. Thank you for watching.